Good afternoon, traders. This is Christian from Extravagant Trade Group, and it is Friday, November 22nd. So, a little bit of bad news. We broke the 6 week streak of the market being up. So 6 weeks in a row, and it looks like that's stalled out this week. By the way, risk disclaimer: everything that we're going through in this video, as always, is for information purposes only, not giving out any advice or recommendations. So, I went through that quick. Big move down this week. SPY down 30 basis points, right? So listen, I think I'm sorry, I'm being sarcastic. It is a Friday after all, and getting ready for the weekend. Maybe spend a little bit of time outside, which is nice. But I think that overall the market was due for a week of chop of a little bit of digestion. That's actually like it on the bright side. Like, this is pretty good, right? I know some people thinking that when the market goes straight up and they look at the fear and greed index and they're like, oh my god, this thing is getting to extreme greed. We're going to have a problem on our hands, that we're getting too overheated. So I think, kind of just taking a positive away from this week, I would rather, like, I don't like when these weeks just continue to build up, where you've got 5, 10. I don't want 10 straight weeks of the market being up, because then I think we do get too overheated. And when there's a pullback, it's going to be a pretty large pullback, and you can have a possibility of kind of getting caught when that happens, right? So something like this, if we kind of just go through, the only thing that was up this week in kind of just this quick macro screen was TLT, and that even backed off from the highs. Where did TLT finished up 10 basis points, but remember, it was down decently yesterday. So at one point, it was over 2% for the week, and that's a couple weeks now we've seen the TLT strong. But as I mentioned in some of the earlier videos this week, it has not. I think it's still making, you could say, basically a lower high for now, right? We have not gotten over, right? So lower high here, and we have not been able to take that level out. So remains to be seen. We could next week. It would be very easy to do, but for now, you could basically say that we've had a bounce in the bonds. So going back to the S&P chart, I want to review just a little bit of today's performance too. There was actually some good option activity today, so I'll talk a little bit about that in about 5 minutes. So, but I thought there was some interesting stuff on the tape. So what do I want to talk about first? Let's just talk about today's action, and then I'll get to the week's performance in sectors. There were some odd things that outperformed. I don't have any positions really in the metal space. Like, besides, I have some FCX calls which I've been holding on to. But steel was pretty hot this morning. U.S. Steel, Cliffs Resources. Just keep in mind, this stuff. If you could, my opinion, right, which could be different than yours, is you kind of have to catch this stuff pretty early. I just don't chase. When I see something like Cliffs and they're buying calls and Cliffs is up like 4% on the day, I just can't chase it when it's up 4% and there's calls. So if you catch it, like, because these things can have, once they get going, they can have some decent momentum to them. But personally, like, I can't chase this stuff when we see calls and the name's already up 4% on the day, which is basically what we saw. U.S. Steel maybe wasn't that much. I think when we started seeing calls come in, the stock was maybe up 1 or 2%. So it becomes a judgment call if you really think this thing's going to move. But that's typically, like, if you look at the flow in some of this stuff today, which again, I know there's a number of, I don't want to call them idiots, but there's a lot of guys who are like, on Twitter, who I guess they're really trying to sell it, that the option flow is, sizzling in this stuff. But it's really, like, it's very short-term stuff. So if you came in, like, my opinion is, if you got long U.S. Steel like last night and you see the call buying today, like, that's great, and it's something that you can sell into. But I'm just not going to chase, when you see something like this at 10 o'clock in the morning and the stock's already up at 10, it's already up here, right? And all the idiots on Twitter are like, oh my God, they're buying calls like crazy and U.S. Steel, and wow, you know, they're sweeping above the offer. I personally, I just can't. Like, I think sometimes you're better off just sitting on your hands a little bit than getting in with that stuff. But you could see through the blotter, right? Most of this stuff happened. There was one order here that was at 952. So this was here, right? So you could have wrote it up to here, right? But you have to understand, like, there's when I talk about like the Twitter idiots, that's what some of their jobs. I know I run a trading room too, but I'm very honest with this stuff. But there's a lot of them that run trading rooms that want to really. I don't really understand why, but they want to fool you into like thinking like this was a great trade today. And you could see, we can pull up when they started. There was probably a little bit of calls that went up, like this one, right? Here is one for $4,000 in premium, right? That caught it at 933. I mean, honestly, am I going to follow something that's $5,000 in premium? Probably not. So you have to understand, like this is somebody. This is a retail order. But in any event, that's just how it goes, and that's how it. So it's one of those things. It's a judgment call when we see stuff like that. You kind of have to think, like, if when we're seeing this stuff, first of all, they're only going out. They're only this week's today's calls that expired today, as well as calls that expired next week. So again, try not to get fooled by the ones who are really looking to fool you on Twitter. You know who these guys are. So I won't have to name any names, but you could just look like who's been. You could look to see who is tweeting about U.S. Steel calls at 10 o'clock in the morning and so forth. It should not be a shock to you. So what you have to think about is if you didn't go in long today, like they're also just buying basically next week's calls, right? These are the shortest things, so it could keep going, right? We've seen this before with Cliffs where it's had a few days. I just decided not to, because names in downtrends, they usually stay in downtrends until they prove it. It again doesn't mean you can't play it for a day trade, but it's kind of tough. And I think Vail was another one that saw calls. So again, it's good to see something else to kind of take away from this and move on. So sometimes these things do have a day or two moves, two or three different day moves is what I'm trying to say. I don't know if that's going to happen in the steel group, but again, it is nice to see something outperform that really hasn't and catch some momentum, right? That's things we'd rather have some things, move up in the market than just continue to kind of fade and go down. Biotech again was hot this week, so when I go over the performance, but you could see the breadth was a little bit better today, even though we really didn't move much. If we go back to the S&P chart here just for a minute, and if we look at the performance for the day, this is one of those days and I want to talk about this because I think it's important, but this is one of those days, but for the most part, like once we got back to flat for the day, which is right where we opened, other than, giving you a little chance, like I bought some SPX spreads for next week. I'll talk about that in just a second. But I took advantage of the dip this morning and the support that we had, and I went ahead and bought some SPX spreads for next week. But that was, I think the opportunities were few and far between today, especially when we do something like this. I just thought I kind of saw the writing on the wall this morning with some names that I own that popped in the first 10 minutes and then just completely faded. So it just seemed like it was going to be more of a difficult trading day that we were going to have. And I think, again, going back to the week's performance, which now I'll bring this back into the picture. I think these weeks, the most challenging thing is to basically sit on your hands a bit and not overtrade, right? The tendency is after we've had 5 or 6 weeks, my thought is you kind of have one, you have to have 1 foot in the door and 1 foot out of the door, which is not my favorite way to kind of position after we've had 6 weeks of gains. So the whole thing, and this is where trading is difficult, is that when there's momentum into the market, right, that's where we want to be capitalizing. But when there's not momentum in the market, for the most part, again, there were some sectors, like, for example, biotech, again, had a very strong week. Software did very well in the beginning of the week, and then kind of conked out a little bit after, after it got a bit overbought in the short term, which again I think is natural. But you can see healthcare also up again, and so there was areas that had some momentum to it. It just wasn't everything, right? That did that, and again, evidenced by what the S&P did for the week, which was down 30 basis points. So that's the job of a trader, to realize when it's, to kind of change your plan a little bit to adapt to what the market is giving you, because this week just wasn't a great week in my opinion to take a lot of risk. And I struggle with that at times. Like, I put on a couple trades this week, looking for some breakouts in a couple names, and they kind of just lost the momentum very quickly, and that's tough. The other thing I talked a little bit about, I think yesterday or maybe it was on Wednesday, that if you've been having a lot of success with short-term options, right, like buying like a couple weeks out or even front month options because there's been momentum, and then once the momentum kind of lapses and did this week, again, I'm not saying this after the fact because I already had talked about this, and I believe it was on Wednesday. You just want to be aware of that strategy. You could really get banged up in terms of P&L if you're continuing to trade like short-term options and the market loses momentum. So if you've noticed that, right, this week where you had a couple, days where your P&L wasn't the greatest, you kind of have to like ask yourself, if you're continuing to trade short-term options and the market loses momentum, there's several things that you should be doing. Or things that you can consider, right? And these are things that I consider too, is when you think that the market is going to start losing momentum, either just stop trading as much, B, lessen your size, or just trade a little bit differently. I think option traders, and I know I've got a lot of option traders in my trading room, they tend to kind of use the same tools, and you can realize that you could trade stock. So when you have a choppy week where you've got, one day where we're down 20 basis points, up another day where we're just up 20 basis points, where those call options or put options are not going to appreciate much in that type of environment, but and they're actually going to lose because you have the time value, right? That's going on when you're messing with really short-term options, this week's options, next week's options, or at this point, front month December options. If they don't move, forget about even if you get it right. If they don't move, if the underlying price doesn't move, you're going to lose because of the theta decay. So the other thing that, of course, you could be doing is just switching to stock trading. And I know that's a big jump for some people who are trading, just mainly options. But I'll tell you, when you have a choppy week, it's really just like not a big deal. It's not a big deal at all when you have a choppy week, because it's like in terms of P&L, because you're not going to lose. You don't have any time decay on stock positions. So that's another way to kind of do things. I also switched to a little bit of call spreads and so forth. So let's move away from that conversation. But I just wanted to kind of cover that. I do think it's normal for us to have the week that we had, where we're basically, having a flat week, and, it's not even that bad. I mean, if you're in a situation where, like, I had somebody ask me, like, when do you think we're going to bounce? I'm like, we haven't really had a sell-off to say that we're going to have a bounce. So if you're like in that situation, you need to be like rethinking what you're doing. Remember, the market doesn't go normally in straight lines. It doesn't go up in a straight line. It doesn't normally go down in a straight line. Again, we're talking about like 85% of the time we don't do that. So just bear that in mind, that if you're thinking that the market really like got hurt this week, it didn't. One thing that I think was very noteworthy this week that we spent some time on and I sent out a midday note talking about the advanced decline line. I think Michael Santoli just did a good job too, talking about market breadth, new highs versus new lows. That's something. If you did not get a chance to watch her video, I make mention of Helene Meisler quite frequently. She did a great video for the TD network, right? So you can find this here, and here's the link. I think it's about a 10-minute video, but what I really like about her and some other people on Twitter that I found is she's very objective, right? So she's going to analyze the market and then basically draw the conclusions from what the market is indicating rather than like what you want to happen, right? So one of the things that she said, which I love, right, when market breadth is leaking like it has been basically all week, and again, not a big down move, but it's been until today, right, which we saw a turnaround in breadth. But when the market breadth leaks and the number of stocks making new lows increases, and that's what Michael Santoli was referring to as well on CNBC, it is generally much harder to make money on the long side, right? So these are things that excuse me, I refer to as market internals, and they're really good to take note of because you want to spot divergence too in the market. That's important. We saw that big time last year. So that's one of the things that you want to just take note of. Number one, to say is if the market is going to break down, sometimes you will see this divergence where breadth really starts to move down. So again, we don't have that currently right now. It's just kind of coming off the highs. So that's point number one, is that you want to be careful in case of major divergences because that could signal that you've got downside coming. Number two, the other thing that you want to take note of with market breadth is just where the wealth of opportunities. If the market is kind of hanging out up 10 basis points or something like that, or flattish, and market breadth is waning, just the opportunities for you to make money are going to be more difficult. Why is that? Because there's less stocks that are going up. So, if you're playing from the long side and market breadth is waning, there's just less. It's just, it's a game of probability, right? If more stocks are going down, more stocks making new lows, it's just that much harder to make money on the long side, right? That's just straight mathematics. So that is that. So considering that we're by the way, and we basically have taken back the 5-period moving average on the close. You could see on the bottom left here that market breadth was more positive. So that's a good sign for next week. So I took a shot, some of which, right, it's looking at these market internals and looking at the technicals. Some of it is also, having a feel and instincts, right? So my thought was, well, first of all, we are seeing again, with the metals space, which I'm not, I just mentioned I'm not very long the steels. I do have an FCX position on. But if the market is going to continue to be kind of difficult for stock picking, you could put on what's called the beta trade, right? Which you go long just the SPX or another index, and that's what I did, going long some next week's SPX call spreads, right? Thinking that maybe we'll have one or two, possibility of a nice up day next week in the shortened holiday week. So that's kind of my thought, and again, that's a little bit of just instincts and just thinking that we will get a day or two where market breadth kind of is stronger. Now, what could kind of derail that trade, of course, and again, that's limited risk, right? It's a call spread, so again, the most I could lose is the premium. But I did a $15 wide. I did a $15 wide call spread. I think I have this over here. I'll even show you which ones I'm in. Well, let's see, where is it? Must be on the private Twitter. Huh. How come I don't see it here? sometimes I forget to put stuff. Sometimes I do make mistakes. But here's my trade. SPX, November 27th, 31.10, 31.25, call spread at 5.30. Just a trade for next week, as I want to take advantage of the negative headlines. I thought there was enough negative headlines. We could get some more next week, right, with the trade stuff, coming closer to a deadline with December 15th. But I just thought that we held. If we go back to the S&P chart, that we held support well enough that maybe we see a little bit of a bounce from this. All right, so just to go over some moves that I thought. So anyway, that's my one trade for next week. I did get stopped out in a couple trades, which is fine. It's going to happen to you where you get stopped out in some trades, and I'll continue to kind of watch the ones that I did get stopped out in. Let's see. So a couple names that I've been talking about on the interwebs. Johnson & Johnson got going, right? This is something, if you look over. So I think that healthcare, especially like the bigger weights in the XLV, like finally got going a little bit. Pfizer was another strong one. Let's see where Lilly finished. Lilly finished above the 200-day moving average. I like this base in Lilly. I took a trade today in Lilly, and I just wanted to make sure I kind of started it in the morning, which I hate starting swing trades in the morning because you just don't know if the strength that you're going to see in the morning will fade, right? As we know, usually the best time to put on swing trades is at the end of the day, because most of the market moves happen in the overnight market, not intraday, right? Which is different than popular thinking. But so yeah, I like this trade a lot. A couple other names that so let's go through some option activity. Let me start with Amazon, which a name is, this name has done nothing, right? It's a name that I've largely stayed away from. But I change, right? If I see something really interesting or if I get a buy signal, sometimes I'll complain about a stock. Somebody asked me earlier in the week about Amazon, and I'm like, I'm not trading Amazon. It's not doing anything. And the best thing to do when a stock does this, when it's range bound, set a couple alerts at pivot points. Like, so for me, we were talking about it in the room today because we did see, and that's sometimes when we see call activity, it's like it gives me a heads up. Hey, look at the stock. Is it something that you want to own here? But if you look at Amazon, they went out to, you have to kind of look at some of the smaller contracts in here. No, still not yet. February. So look at these contracts that went up. These are February 1840 calls, right? Which is pretty far up here, right? 1840 is this VPOC up here, which is interesting on the 1 hour. So I mean that's definitely doable by February, I think anyway. And look at the size that they paid for this, and they did about 1,000 of these contracts in total. But February 1840. So there's two VPOCs up here. Virgin point of controls. 1840 is up here. So again, that's pretty reasonable to think that Amazon wakes up by then. So there's definitely things that you can kind of tailor if you like Amazon here. I think it's interesting, so that's what you want to start to see if you're looking at a name and you're like, you've been positioning in something, or you're thinking and you're like, why isn't the stock moving? Once you start to see like a little bit of institutional accumulation like this, that's kind of what I look for, and then I begin to set alerts. So the one thing that we talked about in the room today, and I said, well, this thing has to get into value. I would watch so we could see next week's value area ready. I would set an alert at 1852. Again, we never know when these things are going to catch momentum to them, so that's why you set alerts. And typically, I try to wait for these things to move first before I just start throwing darts, right? Because if I'm looking for a move, let's say up to 1800, I don't mind missing the first 5 points. That's just me. I would rather have some confirmation that the thing is catching some momentum rather than just keep, getting into something that just doesn't. All right. What else? I talked about Pfizer, J&J, Lilly, Nordstrom, right? Which we had a winner of a earnings trade. Take a look at this on the 1 hour, right? I talked about this actually got above. Basically, I set an alert at 38 because this was the top of value for the week. By the way, look at these VPOCs being taken out and the reversal off of that. Telling you, the market webs indicator really good. And then also 38 is the top of value for the month. So this is a name to watch next week because it's one of those things where it had good earnings and maybe it can actually get above the range and get up to 43. So that's a name to watch for next week. Google is another name that I'm watching for next week. I mentioned this yesterday, and I said this out on private Twitter, that I said it's kind of at an interesting spot. It's broken out, and it's come in, it's testing the 20-day moving average. It was down today, but I would, again, waiting for a little bit of confirmation, waiting for this thing to kind of bounce off of that support. But that's another name for next week. Was really interesting to me is to see some call activity in Hilton. Anybody think that this I know you can't answer back to me, but look at this thing. It's at an all-time high in Hilton. So there was some January calls that went up against open interest. So I'll check that on Monday to see if that increased open interest. But those are the Jan 105 calls. Again, already had 4,600 of open interest. So I don't know if they're taking down that trade. It did go up above ask, so it does look like it was an ad. But man, look at this. I mean, this could be a fun name to kind of play for a breakout because it certainly has made a new high. Again, I can't believe it. I haven't looked at this stock in a long time. And again, that's kind of the thing about option activity is sometimes it can put your attention on something that you haven't been watching. Also, Marriott saw a little bit of calls too. You know, if you want to play something that is not breaking out, there's a VPOC up there at 141, but Marriott saw some calls. I think also had open interest on this trade too. I think this was a little bit of a smaller trade. Yeah, January 140s also open interest, so I'll be checking that on Monday. I just want to see what they're doing. I'm interested if they're taking profits or if they're adding. Again, both look like they were bought, but you know, sometimes these market makers can disguise the flow pretty well. Also, a name that I don't really play that much, but you might be interested in it because it's something different. GM, which has been kind of pummeled pretty hard, so maybe it's ready for a turn. But there was some January 37 calls. I don't know what they were doing here with this spread. But this one caught my eye. Again, has open interest, but the order is above open interest. Those are the January 37s. So again, it could, you know, definitely could bounce. There also is they filed a suit against Fiat Chrysler, so maybe there's something going on there too. Disney is another name. They've got this Frozen 2 that's coming out this weekend, or that's already in theaters. Nice little bull flag that this thing has been putting in. So I think that's so again, this one saw like repeat call activity, probably just around there. Did not close on the highs, but still I think an interesting name considering that it's doing a nice little consolidation up here. What else? Another name that's going to be on, I'll kind of leave it for this last one. Applied Materials had great earnings, got a downgrade with a couple other semis this week, but there was some call accumulation yesterday, so that's a name I'll be watching for next week. All right, guys, so that's it. I hope you appreciated just kind of market thoughts. The main thing, right, when I go through all those things, and we talked about how market breadth and the advanced decline line, these are things that we're showing some negatives this week, is basically to be patient and just let it work its way through. And again, that's why we look at these things, to kind of gauge like our risk appetite and just to kind of realize if we're in an easier environment or a harder environment to make money. And that's kind of how it was this week, was a little bit of a harder environment than the past weeks to make money. And when that happens, you don't, you know, in my opinion, you don't press. You basically just wait for the conditions to improve, and then you can go ahead and attack. All right, so hopefully next week it's a shortened holiday week, but sometimes these shortened holiday weeks you see a little bit more volatility than normal. It's just the way it works sometimes. All right, guys, so hopefully it'll be a nice, fun-filled week next week, And thanks for watching the video. If you have any questions, I would love to see more people, try out the room for a little bit. We've got an exceptional group of traders that are all trying to help one another in spot trades, and the end goal is to make for everybody to make money. And you got a lot of compliments about how well the trading room has been going lately. So thank you, everybody. I appreciate those kind words. All right, guys, have a great weekend. See you Monday.